I know what you're thinking. Oh great, another boring video on real estate investing. I'd rather watch paint dry. But don't worry, I promise to make this more entertaining than watching your neighbor's cat sleep. I mean, who doesn't love the thrill of investing in bricks and mortar? It's like playing Monopoly, but with real money and no get-out-of-jail-free cards. So sit back, grab a drink, and get ready to learn how to make money while you're sipping margaritas on the beach. Because let's face it, that's the real reason we're all here, right? Hi, my name is Deepanch and welcome to my channel Keep Hustling D. Investing in real estate is an excellent way to generate passive income, whether you're looking to supplement your existing income or create a new stream of income altogether. While investing in real estate can seem daunting at first, it doesn't have to be. With the right strategy and approach, investing in real estate can be a lucrative and rewarding experience. In this video, we'll explore the different ways you can invest in real estate for passive income, as well as the pros and cons of each approach. We'll also provide tips and strategies to help you get started with investing in real estate, so you can begin generating passive income as soon as possible. Why real estate is a good investment for passive income. Real estate is a tangible asset that has the potential to generate income through both rental income and capital appreciation. Unlike other assets, such as stocks or bonds, real estate provides investors with a degree of control over their investment, including the ability to make improvements and increase the value of the property. Additionally, real estate can provide investors with tax benefits, such as deductions for mortgage interest, property taxes, and depreciation. These tax benefits can help investors keep more of their passive income, increasing their return on investment. Different ways to invest in real estate for passive income. There are several different ways you can invest in real estate for passive income, including rental properties. One of the most popular ways to invest in real estate for passive income is through rental properties. Rental properties can provide investors with a steady stream of income through rental payments, which can be used to cover the property's expenses and generate passive income. When investing in rental properties, it's important to consider factors such as location, rental demand, and the potential for capital appreciation. Real estate investment trusts are another way to invest in real estate for passive income. REITs are companies that own and manage real estate properties, such as apartment buildings, office buildings, and shopping centers. Investors can buy shares in a REIT, which provides them with a portion of the rental income and capital appreciation generated by the properties owned by the REIT. REITs can provide investors with a low-cost way to invest in real estate, as well as diversification across different types of properties and geographic locations. However, they also come with some drawbacks, such as management fees and potential volatility in share prices. Real estate crowdfunding is a newer way to invest in real estate for passive income. Crowdfunding platforms allow investors to pool their money together to invest in real estate projects, such as new developments or renovations. Investors can typically invest with smaller amounts of money than they would need to invest in a rental property or REIT, and the platforms often handle the administrative tasks of managing the investment. However, real estate crowdfunding also comes with some risks, such as the potential for project delays or the failure of the project altogether. It's important to carefully research any crowdfunding platform and investment opportunity before investing. Pros and cons of investing in real estate for passive income. As with any investment, there are pros and cons to investing in real estate for passive income. Some of the pros include potential for high returns. Real estate has the potential to generate higher returns than other types of investments, such as stocks or bonds. Tangible asset. Real estate is a tangible asset that can provide investors with a sense of control over their investment, such as the ability to make improvements or manage the property directly. Tax benefits. Real estate can provide investors with tax benefits, such as deductions for mortgage interest and property taxes. Diversification. Real estate can provide diversification for investors' portfolios, especially if they invest in different types of properties or geographic locations. However, there are also some cons to investing in real estate, including high upfront costs. Investing in real estate often requires a significant amount of upfront capital, such as a down payment or investment in a REIT. Time and effort. Real estate investing can require a significant amount of time and effort, especially if you're investing in a rental property or managing a real estate portfolio. Risk. Real estate investing comes with some risk, such as the potential for property values to decrease or rental demand to decline. Now let's discuss some tips for investing in real estate for passive income. If you're interested in investing in real estate for passive income, here are some tips to help you get started. Start small. If you're new to real estate investing, it's often best to start small and work your way up. This can help you gain experience and build your confidence before investing in larger properties or portfolios. Research the market. Before investing in real estate, it's important to research the market and understand factors such as rental demand, property values, and local regulations. This can help you make informed decisions and avoid costly mistakes. Have a solid investment strategy. It's important to have a solid investment strategy in place before investing in real estate, such as identifying your investment goals, budget, and target properties or portfolios. Consider partnering with others. Investing in real estate can be a collaborative effort, and partnering with others can help you share the costs and risks associated with real estate investing. Seek professional advice. Real estate investing can be complex, and seeking professional advice from a real estate agent, financial advisor, or attorney can help you make informed decisions and avoid costly mistakes. Understand the different types of real estate investments. When investing in real estate, it's important to understand the different types of investments available. This can include rental properties, fix and flip properties, commercial properties, and real estate investment trusts, REITs. Each type of investment has its own pros and cons, and it's important to understand these differences before investing. Rental properties involve buying a property and renting it out to tenants for a steady stream of rental income. Fix and flip properties involve buying a distressed property, making repairs or improvements, and selling it for a profit. Commercial properties involve investing in commercial real estate, such as office buildings, shopping centers, or industrial properties, which can provide higher returns but also come with higher risks. Consider your financing options. Real estate investing often requires a significant amount of upfront capital, but there are several financing options available to investors. These options can include mortgages, loans, and private financing. It's important to understand these options and choose the one that's best suited to your investment goals and financial situation. Mortgages involve borrowing money from a bank or lender to finance the purchase of a property, and repaying the loan over time with interest. Be prepared for unexpected expenses. Real estate investing can come with unexpected expenses, such as property repairs, maintenance, and vacancies. It's important to have a solid budget in place and be prepared for these expenses to avoid financial setbacks. Property repairs and maintenance can be expensive, and vacancies can result in a loss of rental income. It's important to have a financial buffer in place to cover these expenses and ensure that your investments continue to generate passive income. Develop a network of professionals. Real estate investing can require the expertise of several professionals, such as real estate agents, attorneys, property managers, and contractors. Developing a network of these professionals can help you make informed decisions and ensure that your investments are managed properly. For example, working with a knowledgeable real estate agent can help you identify properties that meet your investment criteria, while working with a property manager can help you manage your rental properties and ensure that your tenants are happy and satisfied. Have a long-term mindset. Real estate investing is often a long-term game, and it's important to have a mindset that focuses on long-term goals and strategies. This can help you weather short-term fluctuations in the market and ensure that your investments generate passive income over the long run. For example, focusing on acquiring properties that generate steady rental income and have the potential for long-term appreciation can help you build a strong real estate portfolio over time. Additionally, maintaining good relationships with tenants and ensuring that your properties are well maintained can help you attract and retain tenants over the long term, providing you with a steady stream of rental income. By staying patient and disciplined, you can build a successful real estate portfolio that provides you with a steady stream of passive income for years to come. Well, that's a wrap, folks. I hope you enjoyed this video on how to invest in real estate for passive income. Now, before you go, I want to leave you with a few final thoughts. Remember, real estate investing can be a great way to generate passive income and build long-term wealth, but it's important to do your homework and approach it with a smart strategy. Whether you're a seasoned investor or just getting started, there's always more to learn and new opportunities to explore. So don't be afraid to take risks, be patient, and keep your eye on the prize. And who knows, with a little bit of luck and a lot of hard work, maybe one day you'll be sipping margaritas on the beach while your real estate investments do all the work. Thanks for watching, and I'll see you in the next one.